Hello and welcome to FX Acrobatics. I am the Acrobat and today we'll be looking at a weekly forecast of the dollar index on the Forex market. Please go through the disclaimer just to make sure that we're on the same page about what this channel is about so that we may not have problems at a later time. Okay, here we're looking at the monthly chart of the dollar index. And we will try to put on some annotations right now. These annotations are strictly ICT based and they show the real support and resistance areas, not the classic or retail support and resistance. Okay, without any further waste of time, let's look at the annotations right now. Okay, now first thing to notice is that from this low here to this high, we divide that at the 50%. If you were to use your Fibonacci tool, you'll see that if you place it from here up to here, then this will be equilibrium. Now this part here is discount and this is premium. So if you buy here, this is where you do an ideal buy and this is where you do an ideal sell. Okay, so let's look at what has happened here on the monthly chart of the dollar index. Here we're trying to see where the dollar will eventually go. So we can see here we have sell side liquidity, and I have not put on the annotations here, but we have made a bounce from this order block here and rejected all the way up. Okay, so now when you really look at this here, you can see that we're at discount, and if you were a position trader, you look to enter anywhere here, put in your position and then look to attack the buy side liquidity up here. So looking closely though, because this is the monthly chart, so these candlesticks take a very long time to come into fruition. So let's look at this here. We have a buy side imbalance right here, and this is the month of December. Now the month of January has moved in to rebalance right here. So after rebalancing, it was rejected rather strongly, as you can see. So now this tells me that is potentially going up the relative equal highs up here, which you can then look to attack maybe in the month of February or something. I don't know, we'll see. But all we are doing in this channel right now is we want to study how the PD arrays, as Michael puts them, how price reacts when it gets to those levels. So clearly after this rebalancing here, you can see that there was a rejection right here. So there was a reaction. That's all we are studying. We'll probably do this thing for the next couple of weeks or even months, we'll see. But we just want to get used to the idea of putting up these PD arrays and then see. Okay, so you can see that price came down. We have this swing high up here, and once this candle here closed above it, it became a bullish breaker. That's why I labeled it plus BRK here, meaning it's bullish. So contrary to this one here, you can see it's labeled minus BRK, so this is a bearish breaker. So we expect that price, when it comes back to this breaker here, because it's bullish, it will probably be rejected. There's an evidence of that happening here. Just when price dipped into that, it was rejected very strongly to the upside. Hence this is a bullish breaker. Alright, when price moved up, it created an imbalance, and again rejected up, went back to test this breaker here, which also has a, which is this series of up close candles here are forming a bearish breaker. A bearish order block. So it's a very strong resistance level. So we'll see if price will be able to come up one more time and finally overcome this very strong resistance. My personal opinion would be, or what I would like to see, is to see price move up to the midpoint of this here and take out this buy side liquidity in the form of relative equal highs. All right, let's move on to the weekly chart. This is the weekly chart of the dollar index, and if we dress it up, this is what we see. So we can see that there's an imbalance right here. I'll soon explain why I have these consolidations marked up, but the important thing right now is we have an imbalance, the buy side imbalance right here, and we can see that price rejected at this order block, which is inside a bearish breaker, as you saw from the monthly. So now it's a little bit refined. You can see that there's a bearish order block right here. These two candles right here, they form the bearish order block, and this order block is actually inside a breaker. Fortunately I haven't shown it here, but I just wanted to have a clear screen, so I extended it out to this point here. So you can see it's the midpoint of this breaker right here. All right, so price rejected rather strongly and was supported here. So it faced resistance there and supported here, and this from the monthly, you saw that this is actually the let's go back just a bit on the monthly. You can see here that this is the buy side imbalance here, and then it is now refined, and you can see the buy side imbalance on the weekly chart. So it was rejected here and we had an up close week. So I've put this eye here, that this is where I'm focused on the weekly chart. We have relative equal highs there, that those form a buy side liquidity, a liquidity pool that will probably be attacked if we go up here. Okay, now let's move on to the part where I explain why I had this labeled here. You see, it is a nice idea that price will probably get up here, but sometimes we can be wrong. You never know, so you must have a contingency plan so as to see if you are wrong, what are you going to do. So when you look at this, you can see that this is a consolidation, this is another consolidation, and we've had a very strong rejection up there. Now price could consolidate in between these two PD arrays right here. When it does that, it will fall into danger of actually going down. If it closes below this imbalance right here, I'll abandon the idea of it getting up here, and I will look at it like this, that it is probably forming an ICT market maker sell model, where you have this as the original consolidation, accumulation, smart money reversal, low risk sell, first stage distribution if this becomes a consolidation, and then we'll look to attack sell side liquidity probably here and finally here. But this could unfold in weeks and weeks. I'm still for this idea though, that we have rejected right here, closed up. I would like to see it attack buy side right here. Okay, moving on to the daily chart. And let's dress it up a bit. Now you can see now it's further refinement. Now you can see price coming down, rejection. The fact that price this day here opened, went down, rejected at this order block, and closed above this previous day here. Now there's a video that I will link in the description from the Inner Circle Traders channel, where he talks about page and revert. So liquidity was paged here and it reverted. Now he has a full strategy explaining how you can actually trade that to make money, but in this channel we are just studying things. So page and revert here, and it is now going to the upside. So price left an imbalance right here, came back into it, didn't fully rebalance, which is good if you want to go to the upside, and it has formed an inside day. There are also strategies for trading the inside day if you have a directional bias to the upside. So we are already leaning to price going to the upside here. We have relative equal highs on the daily, much more refined now, as you saw from the weekly chart and the monthly chart. They're now much more refined. So our forecast is up there for the dollar index in the coming few days and even weeks. Okay, so if you have a very nice inside day trading strategy, you can actually apply that strategy now, but for the bullish unfolding of this day. Yeah, so if it some people would put in a buy stop somewhere here, so that when this candle goes up above this day, then they'd buy. But then ICT has very different strategies where you have to get this thing at a discount. By the time you get up here, you'd probably be taking out your first profit. We're not there yet. Today we're just looking at the PDRAs, how price reacts, or how price has reacted for this particular week on the dollar index. Okay, so it's very nice. Look at this bounce here. Here we have something called the balance price range. In this buy side imbalance, I won't go into the details of a balance price range, but you can see that BPR there. It's an interesting concept. We'll get to it at a very later stage of this channel. Okay, so that's the daily. So we're really looking for the dollar to go up here. Institutional order flow seems to be bullish for the dollar index. All right, let's have a look at the 4 hour for the dollar index. Let's dress it up. Okay, so you can see that we still have that objective now for the 4 hour. This is short term now. Okay, you can see that price rejected as we've been looking at the daily, now refined right here, formed an order block. So this is a bullish order block, did not come back to it on the 4 hour, went up, created an imbalance there, it was rebalanced right here. Okay, continued to the upside, there's a huge imbalance right here, filled it up, rebalanced. This is the imbalance on the monthly. You can see when it rejected on that monthly and then it came down here. So that's where it was, and rebalanced that buy side imbalance right there. Inside here, before it went to the upside to attack buy side liquidity up there, created an order block. This is a bullish order block, has come down now. Optimal trade entry right here. Okay, let me just put in the fib there so you can see. All right, so you can see that 50% of this range from this low to this high, 50% is up here. So this is discount and this is premium. So now you can see that inside this order block, this is our optimal trade entry. All right, so everything right now is pointing that after this other block midpoint has been hit, we got this rejection here, and we're looking for an upside right here. So my prediction is that this following week will probably be an up close week. So we now have a weekly bias, we do have a daily bias, so this is good. If you wanted to frame your trades, this is how you do it. All right, okay, now what I want to do is to just look at how the 4-hour is still respecting the higher time frame PDRAs now. Okay, check this out. This is from the monthly imbalance. So this is how price went into rebalance and is now coming out of it, as you can see up there. So the next level of resistance maybe that you'd expect is up there on the monthly side. Okay, this is from the weekly chart. These are the PDRAs from the weekly chart. This is still the 4-hour chart. The way you can see there, so that I've transposed the higher time frame PDRAs just to see how the 4-hour is playing. So right now price is in between the higher time frame PDRAs. So now you can see they will probably have premium arrays from the weekly. So we'll see how price would like to go in here, probably midpoint of this, whatever imbalance this is. You can go back and dress up your charts to see. Okay, this is the daily PDRAs transported into the 4-hour. You can see how it bounced into that daily buy side imbalance, came back a little bit deep into it again. It's now inside this break, and now what's interesting is that it is staying inside this daily breaker here. It is not moving out because it hasn't been rejected. So if maybe this price action was moving outside the daily, we'd have a different idea, but right now it seems to be really trying to climb out and attack buy side liquidity. All right, let us have a look at the economic calendar. Here you can see that you will see 23 January to 29 January 2022. So looking at these news that are coming up, we also are concerned about the dollar index here, and we have this really high impact news here. So we'd expect that maybe Monday, Tuesday, probably Wednesday, just a little bit of a consolidation. The price might be consolidating. Just expect that in anticipation of this event here, FOMC statement, which will be coming out at 1400 hours New York time. So set up your charts to -4 UTC, I think. Yes. All right. Okay, I will try to capture this event live, just like I did before. If you haven't seen that video, check out the link in the description below. It's there. And then afterwards, we'll come back and see how that analysis is arrived at. So I will show you just like last time. Okay, last time I was a bit showing off how I was able to capture this live, but now you'll be with me analyzing, and we'll try to predict with the PDRAs that I've drawn up already and the institutional order flow. We'll try to see that, okay, this is something we can really predict and see how you can be positioned before FOMC, okay, if you want. But most of the times this is outside the kill zones where we do our executions. So the most part, you'd want to be having fun just knowing where this will potentially go. All right, guys, at this stage, let me just take this moment to remind you to subscribe to the FX Acrobatics channel, like the videos, and then click the notification bell, because if you do that, then you'll be able to get our videos as we release them. It will be easier that way. If you don't click on the notification bell after subscribing, you are going to miss out on these videos. They might not be recommended for you, as this channel is still small. So just try that. If you stumble upon this content, click on subscribe and the notification bell, probably like, so that YouTube can also recommend this content to viewers like you. But thank you. We really would like to have a bigger audience, and help each other grow. All right, thank you. Okay, so now with FOMC coming up this following week, so we might just see this tiny consolidation here, maybe probably continue being stuck between this here, right here. This is an order block, and it might just bounce in between it and this imbalance here, the buy side imbalance, until FOMC. When FOMC hits, we might see a little bit of a protractionary stage to take out whatever sell side liquidity will be resting below here, trick some of the bears, those that think that the dollar index is going down, trick them in once they are captured, and then will probably go up and attack buy side liquidity here. It will be a one-sided move. So that's what we're expecting this week. So we'll see, come back and review what happens. All right, last week we had a look at Bitcoin. Okay, so Bitcoin was following an ICT market maker sell model, as we suspected. Okay, please check the link in the description below and see how we arrived at that Bitcoin will be going to 32,000. Okay, so bringing that image from the video I just mentioned, you can see that we have the original consolidation, accumulation, smart money reversal, first stage distribution, and we said that after leaving this consolidation here, which I've refined a bit, it should be, this box should be up here, because it left, we're looking at the bodies, so it left that consolidation and it started to consolidate here. So our prediction was that it will go down as it is going down here, and form another consolidation of second stage distribution, and then finally attack sell side. So as you can see here, I have the consolidation refined from the previous video here, and then this pause here went down, consolidated just a little bit. If you go down to the lower time frame, you'll actually see this consolidation down here. So consolidated, and now that is second stage distribution. So now it has left that consolidation, and it's around 35,221. So not that far from our prediction now. So we'll just watch this week going to attack the sell side liquidity underneath this consolidation. So that's how Bitcoin is going. We'll come back and review if our prediction comes to fruition. So you can see that these ICT concepts are really good. So I'll probably be looking, if I were trading this, for me it feels like Bitcoin is far too gone. I wouldn't make that much money, so I would focus on the altcoins. When Bitcoin dips below this here, I'll probably pick up some really cheap altcoins, like Cardano. Maybe it seems really good and cheap, so I can pick that up. Who knows, in the near future it might 100x, because when Bitcoin gets down below this, it might consolidate a bit. It will probably go down to 20,000 or something, but I won't wait for it to do that, because Bitcoin has that tendency of then maybe spiking up. It might probably then go to that 100,000 that everybody's wanting to see. But before it can do that, it needs to take out some liquidity. it is following the ICT market maker sell model. All right, guys. As you can see for yourself, a lot of these ICT concepts are working right now. You can see how price respects the PDRAs. You can see the market maker sell model working on Bitcoin, even though people believe it shouldn't, because Bitcoin is decentralized and not. I will explain at a later time why it is delivering the way that ICT says it is. There's an explanation. Yeah, so I mean, I don't know if you want to see a way of living. I believe this is it, guys. This is the way.